Hello friends, now I will speak something on the investment in bonds. So, what is this particular bond now? You can say whether investment in bond has to be made, what are the factors we have to consider before we invest in bonds, and why investment in bonds, that I am going to discuss now. First of all, see, bonds are normally risk free securities, where normally the investment is made in any of the government sectors, and normally what happens is the investment made is safe, secure, and that will give you timely returns. Now, what are the things which we have to see normally in the case of investment in bonds? Investment in bonds is generally for the long term, and normally the period of maturity can be in the particular time period itself. So, there are even short term bonds, there are also medium term bonds also. So, when you look at short term bonds, these bonds mature somewhere around normally in 3 to 5 years itself, that is short term bonds. Medium term bonds mature somewhere around 6 to 10 years. Long term bonds we can find out normally it can get matured even after 15 years. There are such type of bonds also. So, when you look at these types of bonds, normally we should know normally see why investment in bond. First, reason why we have to invest in bond is bonds are risk free, remember this. Second one is normally bonds will give us guaranteed returns and timely returns. Second important area why we have to invest in bonds. Thirdly, bonds will have a definite maturity period. On maturity, definitely what happens now again, we will get back our amount. What type of amount now again? Principal amount invested plus returns plus interest, whatever it is. So, these three things are there for a bond characteristics. So, that is why investment in bond is good. And now see whether there are private bonds, even private company also offers bonds, like we have got normally IDFC bonds are there, even children's education funds are there in the bonds, okay, that is there. So, deep discount bonds are there, and in such case normally see what the objective is different, objective of investment in bond is different. The father want to invest in bonds for his higher education of his son or daughter. So, in such case education bond is chosen. Pharmaceutical bond is there, where investment is made only in pharmaceutical companies. Healthcare bonds are there, where normally we can find investment is made only in healthcares. So, most of them normally prefer to invest in bond because normally bond is not linked to equity markets. So, there is no volatility, no market risk, no risk of liquidity. That is why people prefer to invest in bonds rather than investing in stocks. Okay, sometimes normally we come across convertible bonds. Convertible bonds are normally, see, these are the bonds which can be converted into common stocks. So, whenever we need that. So, in such case normally you see the convertible bonds is also one important option there. So, any point in time if the stock is not performing, we can convert it into bonds and see that normally we are in a safer side. Or suppose if the stock market is performing well, our bond can be converted into common stock, then it will have a property of stocks and shares and it will perform well. So, in both the sides normally a person can act as normally see that normally its returns are not been going averse. Returns are protected. So, in such case normally see the best thing is normally investing in bonds. So, one part. Next one is benefits of investing in bonds. The investor can get the following following benefits after investing in bonds. First thing is normally since bonds are risk free, no need to monitor the markets, no need to cater to the markets and see that you consult experts, you seek normally seek the advice of them, watch capital markets, give your time in the market. Timing in the market is not required in the bonds. So, why? Because it is sure that it will provide you the guaranteed returns. On maturity, you will get normally your matured amount plus interest. So, this is one important advantage which is there in the case of investment in bonds. Second important advantage what you have in the case of investment in bond is, the bond will give us normally tax benefit. Investment in bond normally again, see, suppose if there is 80C benefit, section 80C benefit under Income Tax Act, we can claim for the same. Investment in bond will also give us tax benefit, tax exemptions can be claimed, one thing, second important benefit. Third important benefit is normally on time our fund will come back to us. So, in such case guaranteed returns are possible. So, our maturity, on maturity we can see that bond money will reach us, investment with returns will come, and this can be reinvested further in any other avenue whichever we choose further. Okay, this is there. And fourth important thing is now again see the investment made in the bond is not in those areas which is not performing, in not those areas where there is a likely chance of getting affected by risk. So, in such case normally your bonds will give you timely returns. So, that is why investment in bond has got its own advantage. Money will grow and on time funds are reached in your hands. This is there. So, these things are coming across when you look at investment in bonds. To sum up, what I can say is investment in bond is good. Why? Because those people who don't want to take risks, those people who want their money on time, those people who have got some objective in life and for meeting those objectives they are in need of funds, they can invest in good recommended bonds and see that on maturity they will get principal amount plus interest. The valuation of the bond is made by normally how much we invest and what is the rate of return which has been promised to us as per the government of India, and then normally how many years it will take to mature. On that basis valuation is made, and this valuation will help us to know how much is the fund which we are going to get on maturity of that particular bonds. Say 1 year invested, 2 years invested, 5 years invested. At the end of 5 years, one is able to identify how much returns he will get along with the investment made in the respective bonds. So bonds are totally risk free. Bonds are made with a particular intention. It has got a face value. To tell you, face value of the bond starts with only rupees 10. And the maximum amount normally which a face value has got normally again, it is normally cannot be determined. So this value can be in any value, any ranges. It can be again see the lakhs together also. Minimum is normally say 10 rupees face value. So this what is normally say the peculiarity of a bond. Small investor can also invest in this. Medium size investors can also invest in this. Top investors can also invest in bond. Those who don't want to take risk, they can invest in bond. So it is a suitable option for those people who are risk averse. Thank you very much.